Good morning, everybody. Welcome to another day on Market Report brought to you by Mike Bjork. Today is Monday. It's May 2nd. Wow. Year's getting really, we're almost halfway through the year here. Hey, we got a couple economic news releases to go over today, and we'll start off with the market PMI. So we're kind of getting into the industrial manufacturing numbers today. So market PMI basically stayed the same as March at 50.8%. Basically, anything above 50 is considered expansion. Anything below it is considered contraction. So obviously we're right there at a hairline fracture of going into contraction mode. Kind of the same thing with ISM. We had 51.8% in March. Forecast is supposed to be kind of in the same range of 51.4, and it dipped all the way down to 50.8. So we're just hanging in there in terms of manufacturing before it goes into contraction mode. So this is something definitely want to keep an eye on, especially the Fed, as in terms of they're going to be raising rates. So every time they raise the rates, the dollar gets stronger, and as in turn, it helps us. It makes it more difficult for manufacturing to be able to export these type of goods to other countries, as those kinds of goods will become more expensive. The dollar has weakened a little bit, especially to the yen of late. So that's probably what's kind of helped keeping us in the expansion territory versus going into contraction. But this is definitely something we want to keep an eye on. Construction spending dipped in the month of March. So back in February, we had 1% growth. It was supposed to kind of be pretty close to that same range in March, and it came in at 0.3%, so barely above water here. Stock market's still up today. Again, it's taking more of its stuff coming from more likely the earnings reports that are still being kind of released out there. They're trying to see if they can get a boost after last week. They took a loss. Which for the week, they took a bit of a loss, especially after Apple's disappointing numbers there. So bond market right now, we did start off a little higher, so we're down for the day, but we are about the same where we left off on Friday, which basically we're kind of holding there between the ceiling of between the first and second resistance level, even though we did start it above the second day resistance level. So we'll have to kind of see if we can break above that. I would kind of float around just because we did start the day above that, so it looks like it's trying to fight its way going above that second resistance level. If we could stay above that, that becomes a floor resistance. It will help us maintain a little better rates. But right now our interest rates are about the same where we left off on Friday. All right, folks, I hope you guys have a wonderful rest of your day. We'll see you guys tomorrow. Later this week, they will be kind of gearing up later this week for jobs numbers will be released on Friday, so that'll be the big report for this week. All right, you guys have a great day. We'll see you guys tomorrow. Thanks for watching. Bye-bye.